None of this should be taken as financial advice because I'm always going to tell everyone to do their own research before buying anything, but I've learned a lot from the markets over the last 3 years, and if I could have a talk with my younger self, these would be my top 5 tips. Number 1. Understand the entire economic game is fixed. Yes, I am in the camp that says these trends and patterns are not happening organically. If they were, none of us would need to learn technical analysis. Major corrections are guaranteed to happen. For example, if you've ever wondered why the S&P 500 index will retest the 200-day moving average every few years, it's because when the total value of the US stock market becomes greater than the amount of domestic goods produced in America, it's time to rebalance the scales via a flash crash or black swan event as a way to justify this major correction. Once you understand this, you can better prepare yourself for the next crisis event by using the information to your advantage. Number 2. Find out what the current economic conditions are, meaning, are we in a bullish uptrend or bearish downtrend, or somewhere in the middle? This will help you better determine how much money to put in and what strategies might work best. It would make more sense to aggressively buy or dollar cost average at market lows than highs. Just looking at the last 30 years of stock market data, I've noticed bull runs usually start somewhere between early January and late March depending on the economic conditions at the time. Of course, you wouldn't know it until 3 to 6 months later because that's about how much data is needed to determine when the bullish or bearish trends actually started. I would make the argument that stock market bull runs generally last anywhere from 4 to 10 years before the cycle reverses for the long term. There isn't as much data when it comes to Bitcoin cycles, but bullish crypto trends tend to last between a year to a year and a half. They are short but extremely volatile. Number 3. Are you a trader or investor personality type? You should already know what your end goal is before ever jumping into the markets. For me, it's early retirement. For you, it could be something else. If you don't know what your target is, I would recommend not participating in the markets until you have a good reason to, because honestly, the stress that comes with the money game isn't worth it sometimes. Whatever your knee-jerk reaction is, that's the side you should probably start with. You can always hop from investor to swing trader at any time or do a combination of the two. Regardless of your starting position, you'll still need to know how to read charts anyway before making an informed buying or selling decision, because there is a big difference between gambling and taking a calculated risk. Number 4, don't compare yourself to other traders or investors. The books and videos you'll see are most likely coming from professionals that have been doing this 5, 10 plus years. They've already made all their mistakes and blown up a couple accounts, so what you're seeing is the finished product or the polished version. You'll be able to learn a lot from people at the top of their game, but initially, you're going to be doing more learning than making money. Take your time and learn as much as possible before going all in on any trade or investment. You will have losses, but you just need to make sure your gains outweigh those losses in order to be profitable. Number 5, don't chase money. This is why 95% of people fail in the markets, because they're too busy chasing money because they can't control their emotions. Don't try to be this jack of all trades and think, well, Monday I'm gonna go long on Nvidia, Tuesday I'm gonna start investing with Apple, and Wednesday I'm gonna buy a put options contract on Starbucks, and the rest of my portfolio I'm going to dump into Bitcoin. Okay, that is the wrong way to diversify your portfolio. Start with a small amount, something you're okay with losing until you can find your style. You really should only be thinking about making small consistent gains anyway starting out, or as I say, gas money. An experienced trader can bounce around daily because they know what they're doing, but someone brand new to the markets, absolutely not, unless you want to lose sleep over this. If you wake up in the middle of the night thinking about a trade or investment, it's because your strategy is severely flawed. These days, I never think about any of this stuff when I go to bed. I've made just about every mistake possible and regret nothing because what I know now can be used for the rest of my life without having to think twice about it. If I had to follow these tips when I first got started with the markets back in 2020, it would have saved me a ton of time, money, and frustration. But the next best thing is to pass the information on to you guys, so hopefully you can avoid making the same costly mistakes. So, if you found this helpful, leave me a like or a comment on the way out for the algorithm, or consider subscribing for more videos like this. Thanks for watching, and I'll see you in the next one.